yeah. The Amero, the Amero, the Amero. Take me for
Episode 8. What does the Bank of Korea do, and why should investors care? Welcome back to the kitchen table. Imagine you are a young investor or a fintech builder living in Seoul. You have been studying the global markets, and you make a rational decision. You buy US tech stocks. You buy Apple, you buy Nvidia, you hold US dollar denominated assets. But you do not live in the United States. You live in South Korea. Your rent is paid in Korean won. Your groceries are bought in won. Your business loans are denominated in won. Suddenly, the US Federal Reserve raises interest rates. The US dollar surges in strength. You open your brokerage app and smile. Your US stocks have skyrocketed in value when converted back to won. You feel rich. But then you walk to the grocery store and the price of imported beef and fruit has surged. You check your business account and the Bank of Korea has just raised local interest rates, making your startup's loan cripplingly expensive. You realize a harsh truth. Your investments might live in a dollar world, but your survival is anchored to the won. Welcome to Season 1, Episode 8 of the Amero Digital Bridge to the FinTech Future. I'm your host, Chesun Lee. Today, we are looking across the Pacific. For our Korean investors, our global diaspora, and our FinTech builders, we are answering a critical question. What does the Bank of Korea actually do, and why should you care? Today, we will break down the mandate of the Bank of Korea, BOK. We will explore the brutal counter-argument of global finance that despite its independence, Korea is profoundly exposed to global dollar conditions it does not control. Most importantly, we will transition into the future. We will look at how Korea is fighting back through digital money experiments like Project Hangang, and why Korean audiences need to urgently understand the coming North American monetary changes. To understand how your portfolio and your business are affected, you must first understand the institution pulling the levers, the Bank of Korea. Established in 1950, the BOK operates with a primary legal mandate very similar to the Bank of Canada, price stability. The BOK manages the value of the Korean won and aims to keep inflation at a stable 2%. They do this through their Monetary Policy Board, setting the base rate, the reference interest rate that dictates the cost of money in the country. When inflation rises, the BOK raises the base rate. Just as we discussed in our earlier episodes, this triggers the monetary transmission mechanism. Commercial banks in Korea immediately raised their lending rates. For the average Korean family, this hits extraordinarily hard because a massive portion of Korean household wealth is tied up in real estate, specifically through variable rate mortgages and the unique jeonse housing deposit system. When the BOK hikes rates, household consumption instantly freezes. But the Bank of Korea has a dual burden. They must also ensure financial stability. If they raise rates too aggressively to fight inflation, they risk collapsing heavily indebted construction companies and suffocating the vibrant Korean tech and startup sectors. It is a terrifying tightrope walk. But here is the harsh reality, the counter-argument that every global investor must accept. The Bank of Korea does not operate in a vacuum. It is heavily constrained by a force it does not control, the United States Federal Reserve. Korea is an export-driven economic powerhouse. However, it relies entirely on importing raw materials and energy, priced in US dollars, to manufacture its goods. When the Federal Reserve in Washington decides to raise interest rates, global capital flows out of emerging markets and Asian markets, rushing back to the United States, seeking safe, high yields. The US dollar strengthens and the Korean won plummets. When the won loses value, the cost to import oil, gas, and food into Korea skyrockets. this creates imported inflation. Even if the domestic Korean economy is struggling and desperately needs lower interest rates to stimulate business, the Bank of Korea is often forced to raise rates just to defend the won and stop capital from fleeing the country. This is the vulnerability of the current analog fiat system. An independent nation's economic destiny is routinely hijacked by the macroeconomic policies of a foreign central bank across the Pacific. So, how does a highly advanced export-driven nation protect itself when it cannot control the global reserve currency? It upgrades the infrastructure. South Korea has realized that the future of monetary sovereignty lies in technological superiority. This brings us to a massive transition in our global financial story: tokenization. The Bank of Korea is actively pioneering the next generation of money. They are testing wholesale central bank digital currencies, CBDCs, and engaging in live institutional pilots, famously associated with initiatives like Project Hangang. What is Project Hangang testing? It is testing the tokenization of deposits. Instead of relying on the slow, expensive, and opaque correspondent banking network that currently governs global trade, the BOK is testing programmable money. They are exploring how commercial banks can issue tokenized deposits on a shared digital ledger backed by wholesale CBDC. Imagine a Korean semiconductor manufacturer paying a supplier in North America. Today, that transaction takes days, incurs massive foreign exchange fees, and exposes both companies to currency volatility. Under the tokenized infrastructure Korea is testing, that payment could settle instantly, utilizing smart contracts to ensure the money only moves when the goods are digitally verified at the port. This is why Korean audiences, fintech builders, and investors absolutely must care about the Amero and North American monetary change. If North America integrates its monetary infrastructure, whether through regulated stablecoins under the Genius Act or a bridge asset like the XRP ledger, it creates a digital finternet. Korea's Project Hangang and North America's digital frameworks are two sides of the same bridge. If Korean startups and investors understand how North America is upgrading its settlement layer, they can build the interoperable fintech products that will capture the wealth of the next decade. Monetary policy might be controlled by central banks, but the technology that moves the money is being built by you. Before we close today, let's bring this back to the kitchen table with our weekly Q&A. Question 1. As a Korean investor with U.S. assets, am I actually protected when the dollar strengthens? Only partially. Your U.S. stocks gain value in won, acting as a great hedge. But if the strong dollar forces the Bank of Korea to raise interest rates, the local economy slows down. Your everyday living costs go up due to imported inflation. And if you own local real estate or small business, the value of those domestic assets drops due to the high borrowing costs. You win on your brokerage app, but you lose at the grocery store and the bank. Question 2. What makes tokenization and Project Hangang different from just using my current mobile banking app? Your current mobile banking app is incredibly fast for messaging. When you send won to a friend, the app sends a message instantly, but the actual settlement of funds between the banks happens later in batches. It is a closed domestic loop. Project Hangang and tokenization are about instant, programmable settlement that can cross borders. A tokenized deposit is a digital bearer asset. When it moves, the value moves instantly with it, and it can be programmed to execute only when specific business conditions are met. Question 3. What is the call to action for today? We are entering an era where domestic policy is entirely tangled with global digital infrastructure. I have prepared a specific, localized guide for our Korean listeners and global investors detailing how the BOK's digital experiments intersect with US stablecoin regulations. Drop a comment below with the word Korea, and I will send you the localized policy briefing directly. I'm Chisun Lee. Thank you for seeking the truth behind the money. I will see you next week on the Amero, where we begin Season 2, North America Under Pressure.
Make me